23rd of May 2023, Tuesday, MAO with Cal once again. Guys, it's me. I'm so sorry. Last Friday, Monday, very, very tight with work. Oh, it was amazing. It was crazy, but it was really fun because I was trying to help a lot of people to make money from the market using our latest TCS. And I think that the result is phenomenal. But whatever it is, thank you guys for waiting. And thank you for all the help to let us hit the 1,000 subscriber. Now, Joe Biden versus McCarthy, right? So what will be happening next? Well, we saw a lot of whipsaw, a lot of seesaw. One moment, McCarthy says that things are okay. Next moment, he says it's not okay. Of course, we know that Joe Biden now really, really wants more money to be utilized, and he cannot afford to lose this debt ceiling battle, because if the thing happened, if he basically get lesser than what he wants, it's going to be a big blow for his next election. Yeah. And of course, JPMorgan is pretty bullish the market, while Morgan Stanley, as usual, is bearish. So more details coming up. All right. Once again, thank you, Ames, for all the kind sponsorship. And of course, disclaimer apply as usual. Now, first of all, guys, we have hit the 1,000 subscriber. Yay! Well done, guys. Thank you so much. So the thing is this, we will be announcing through a very special video tomorrow about how we're going to celebrate this. You have to watch that video and then leave a comment in that video, okay? It'll be out tomorrow. Look out for that. We're going to have a very big party. As long as you guys basically comment, you stand a chance to join the party, okay? So don't miss it out. All right, so we have more than 200 students and traders are trying out our TCS, the TWB crazy system, and they really, really likes it. All right, you can see that it's simple, it's easy to use. Strongly recommended to people who wants trading to make things easier. And of course, we have people saying that it's so easy to install, and then they try on paper profit, on paper trading, they make money, they go live, and they really profited from it. This is really amazing. And of course, they say that there are losses, okay, there will be losses in the market, but overall, the winning trades usually cover it up, and this is explained. And I do it every single day, 2 sessions, okay? I'll be around to contribute, and I'll tell them what you can do in the market. This is something that you don't see in the market. All right, contact us through Facebook if you or this our website. We will love to assist you. Yeah. Okay, so let's recap what happened last night. So last night we saw the Dow down 140 points. Wow, okay. And the S&P hardly budged because NASDAQ is up by 46. So basically the NASDAQ and NASDAQ up while the Dow is down. So basically it contra each other to let the S&P almost flat. Now what is interesting is this, the Tesla up by almost 5%. Yeah, that's very interesting because they are going to lower down the price further. Wow, okay. Okay, so lower down price further, get a larger market share so that the revenue can go up. Okay, this is something that Elon Musk used to like to do. All right, the thing is this right now, that we all know that Wall Street is all waiting for the pivotal debt ceiling meeting, and the government officials scramble to avert a default. Now we all know that the market now is buying heavily into the NASDAQ to hold up the market, but of course once with the interest rate environment coming back in again, I think this will take some profit. So we all know that this Joe Biden and McCarthy will be has spoken, and again, they have their own views. No one is really giving way, even though Biden or the White House just now moments ago said that they will try to look at something to cut and reduce, but it's going to be a very small figure, but at least there's some form of what they call a little bit of positiveness. Yeah. So some people are concerned, but some people think that the economy is still pretty strong. And in fact, it's so strong that we can allow more rate hikes. So again, different views. So the most important thing is this is going to be a relatively light week for economic data. All right, we have the second reading for the first quarter GDP. And of course, if this number happen to go low to the zero mark, this is going to be a big problem, because that means that recession is not too far away. And of course, on Wednesday, we had the release of the Fed meeting minutes, and this should actually let us know whether more hike or less, or could be a pause. All right. So Tesla, it was pretty cool. I'll show you Tesla chart right now. Okay, let me change my color on my thing. Okay, so Tesla came down, broke below my 174 support, yeah, and then it came down to about 158. And then after that, it got itself supported. Huge volume came in. You can see that. Then after that, it goes and try back 174. But last 3 days, it broke over 174. So where it's going to go now? I think it's heading back to about maybe about 198 zone itself. Now, the moving average says for 200, but I don't think it'll hit 200 this time around. I think 198. Now, one thing to note, the last time with the RSI, it was at a high level. The Tesla was trading about 210. So if this time, if Tesla do recover to 198 and the RSI hits the top, this could actually means a downside trending momentum, and that should bring Tesla back. Now I'm still waiting for Tesla to come back, cover back this gap here at 142. Okay, so I'm still waiting there. So now just wait for our turn to take a short position again. All right, this is how I feel about this counter right now. Now, if you use the TWB system, it'll be even easier to understand this. Now, basically, right, Tesla, when it was trading about 160 area, now this is CFD prices, yeah? The KSI of mine, the Poised indicator, started to turn green. So that is a first sign that boys are buying. And with the KCX black color, that means that the momentum is coming in. It's a buying momentum. So with bar is yellow, KSI green, momentum is black. This is what we taught in TCS, right? This is where prices move. Okay, now even though the last few days there was a few selling wave, but the boys have been pretty positive. They've been buying, they've been stalling in, been keeping, even though the momentum says that there's some selling, but the boys have been absorbing all the selling. And once again, when the bar turns to yellow, bang, this is how it goes. So now you understand why people like my TWB system, because it's simple, it's easy, and it's consistent. I don't need to check about Tesla, their earnings. I don't need to check whether what Elon Musk is saying. I just had to strictly follow the colors. And of course, if the colors say buy, just buy. The colors say sell, you just have to sell. It's as simple as that, yeah? All right. So let's talk about the US debt ceiling right now. So McCarthy calls Biden meeting productive and professional, but no debt ceiling deal yet. So the thing is that Janet Yellen reaffirms that the June 1st date is the earliest that the US could be at serious risk of debt default. Okay, so the thing is right now, McCarthy says that both teams are going to come back together and work through the night on a compromise deal. So I did say that before, they'll try to compromise, which means that very clear, Joe Biden wants some more money. Republicans will say no to it. In fact, they want reduction. So they have to find some way, some other places to do this plus and minus. But eventually, they will find a way to raise it up. Okay, I'm pretty sure of that, right? It's quite impossible for them to have a default. But of course, McCarthy 2 days ago said this. It was a little bit on the negative side. Let's watch this, yeah? Okay, hold on a minute. I forgot to turn my volume up. Give me a minute. Sometimes you see, long time. This is something that you do to that makes us. Yeah. Okay, let's go. I'm up. Okay, hold on. Oops, sorry, still not there.
The American public think is wrong if we simply saying let's spend what we spent 5 months ago. But every moment I've spent with the president, he doesn't want to go there. He does not want to go back $1.
All right, so you hear yourself, that's the original word for McCarthy. And it's very clear Biden wants, and he's not going to reduce whatever he is already on his table. So that's why this is the thing that is causing the little problem here right now. So of course, Yellen reminds everyone, okay, so what happened is this, some people actually felt that Janet Yellen was exaggerating about the risk of a default by putting a lot of pressure on everybody. This Senate, right, felt that way. So let's see what Yellen had to say in response to that. Yeah, let me bring what Yellen said. Okay, a moment. It's not the one. Apology on that. A lot of files on my hand right now. Where are you, Janet Yellen? Oh, this should be the one. Wait a moment, yeah? Okay. Okay, somehow the file went wrong. Just give me a moment now. Where is that file? Okay, somehow it has lost the file. Did I lost it? It was earlier, was here. Okay, I think I lost it already. Oh gosh, I must have accidentally deleted it away just now. Okay, apology on that. I found it. Okay, I found it. Okay, it's here. Sorry. Sometimes things happen, yeah. Okay, let's hear what we have to say from Janet Yellen.
The day is here, said Rep. Ralph Norman, a member of the Freedom Caucus. What do you think you could do to convince Congressman Norman June deadline is real?
Well, Treasury has a long history of informing Congress about how much cash and headroom we have under the debt ceiling. And we take pride in the credibility of the forecasts that we make. I would point out that the Congressional Budget Office has recently indicated that they expect that early June is will be a problem. And forecasters on Wall Street who look at information daily on our cash balances and resources agree. So there will be hard choices to make if the debt ceiling isn't raised. And, you know, I would simply say since 1789, the United States has a history of paying its bills on time. That's what the world wants to see, a continued commitment to do that. It's what underlies U.S. Treasury securities as the safest investment on the planet.
All right, so you hear from herself. Indeed, Janet Yellen says that since 1789, they have never defaulted. So of course, they don't want it right now, especially with Biden in the House and trying to win back continue his time as a president. So again, I repeat, very good chance that there'll be no default. But the thing is this, there will be a knee-jerk happiness when they finally say, okay, let's raise the debt ceiling because of this and that. The market will be happy for a short moment. But when they look into it, I'm pretty sure they won't like it, and then the market will start to sell. So mark my word and see whether what will happen, what I said will happen, yeah? All right, so let's go and look at it right now. Indeed, Wall Street is watching her numbers very closely every week. So it's impossible for her to lie. So we can see now very clear that the cash flow is now really very low at the moment. In fact, so low that the last time we saw this low end, it was back in this January 2022. And of course, we had it back in 2017. And of course, we had the one that the big problem was back in 2011 and so forth, right? So all these speak for itself, and that's why Yellen needs things to be done ASAP. All right, so Biden started to show something here. In fact, this morning, Biden says that we need to reduce our spending, and this is like in chorus with what the Republican want. So let's see whether they'll give a breakthrough on this, yeah? All right, so there's some interesting ongoing articles showing about this. Say the White House has warned stocks may plunge 45% and a deep recession if they strike in the third quarter, if let's say the US default. So apparently now, right, I can't can't really see where this came from, but it's on most of the second liner financial reporters. In fact, Yahoo actually reported this, but they took the data from Business Insider. All right, that's why I have my reservation. I check on Bloomberg, I check on this CNBC. I don't find this particular statement. Yeah. So the thing is this: they say at the CA that millions of people will lose their job, and sharp economic contraction could lead to massive recession if there is going to be a default. In fact, it's outright in the third quarter of 2023, the first full quarter of stimulated debt ceiling breach, the market may plunge by 45%, and that will hit all the retirement accounts, and consumers and business confidence will cave in. So all this, what we know, of course, imagine if you cannot pay, the whole world will really, really be afraid. And of course, the next thing we'll do is that we all know that the US Federal Reserve will come in to save the day as usual. But the only way to save the day is to print. And when they print, the dollar will come off. And then there will be a lot about inflation. And if that's the case, then interest rate will be going up again. So that's why now we have this guy, Neel Kashkari, saying that, okay, the June rate pause is really too close to call. Now, he's one of the committee members that are going to be voting. In fact, he says this: we believe that, right, the central bank can still afford to have more tightening. In fact, itself, right, he had been in a committee for 7-8 years, and he felt that now is the most uncertain time. And of course, he says that we may need to go north of 6%. Now, remember this, guys. I was one of the few, in fact, very few people who call for interest rate at 6%. Right? Remember, I said that it will go to 6%. And of course, a lot of people were just laughing away. I said, there's no way to go there. In fact, 3% itself is way too high. But today we have 5 already. So this is someone from the Fed itself. All right. So saying this, and of course, we all know that he is a voting member. So whatever he says makes some sense, right? Now, the thing is this, even Jamie Dimon from JPMorgan is saying that now that there's a chance that you can taking up and not just 3.78, in fact, can go to as high to 6 to even 7%. Now, this is coming from Jamie Dimon. He is the CEO of JPMorgan. So, of course, you don't need to quote what I say, or you can just, but you can see these two guys, they are credentialed, I think more than that, right? So you should know that things may really go crazy. So Morgan Stanley says that no, the US rally isn't the start of the bull market. In fact, he believes that now this is actually a time to get out. So Mike Wilson is one of the Wall Street strategists since recently that in year 2022 was pretty spot on. He was really hitting it almost every time. The turning point was perfect. But for 2023 now, he's seemingly wrong because why? The S&P has rallied about 9% for the year until now. So the thing is this, he's asking us, is this really the final breakout to confirm the bull market? And this Mike Wilson wrote back to his client, and the answer is no. Okay, he says that there's risk in lofty valuation, a narrow breadth of stock driving against obviously the FANGs are doing it, and of course outperformance of the defensive stocks. In fact, he is looking at it from a half empty glass. But then again, Subrahmanyam, all right, apparently she says that she sees a upside. Interesting. So she's from another housing from JP. So the thing is this, she's saying that the market should go up to 4,300 instead. So this is very interesting, two different views. So for Morgan Stanley strategist Mike Wilson, he said that don't be fooled by the recently S&P rally. In fact, this could be a trap and things can get very bad. So which side do you think you are? Are you in the bull camp or the bear camp? Please write in the comment box, yeah? All right, so Bank of America is bullish. Okay, for them itself, they're bullish. In fact, they believe the year-end target for S&P is about 4,300 area. Let me bring it in. Yeah, that means that Subrahmanyam came from Bank of America. My bad, yeah. So the thing is that she says that most likely we'll see the market going up. All right, they are looking at basically about 4,300, all right, same thing, yeah? But the thing is, some people even say that they may go to 4,575. This is actually from one of the major Wall Street firms, okay? So majority of people are looking at 4,002 to 4,003, all right, for this year. Now, for myself, I think that we need to go down first, then we talk about upside. But of course, upside will naturally come because there's so much money available later. And I believe that Federal Reserve will come in and save the day. All this will have its benefit, yeah? So I want to talk about NASDAQ now to wrap it up for this MAO. Let's take a look at NASDAQ. This is NASDAQ versus the 10-year yield. And this is the inverse of 10-year yield. So you can see that now that every time the 10-year yield and the NASDAQ, they move in tandem. So if the NASDAQ is going up, the 10-year yield inverse is going up. And when it's come down, they both came down at the same time. So even from 2022 until now, March, everything is going in line. But very interesting, recently, there is a divergence. The 10-year yield now, as you can see, is still inverted, means going upwards for the one. And then the NASDAQ is also going up. Now, by right, the yield going up, right, that means that if the NASDAQ, this is inversion, but if the NASDAQ is actually, the yield is going up, usually that means that interest rate environment is going to be kicking in, and that's not very good for NASDAQ companies. But because now they're buying so much into the FANGs, so now you have a decouple right here. So to me, it's just a matter of time that this will happen again. That means that the NASDAQ will pull back and the yield will technically come off. All right, this is the inverted one, so it will be going up. All right, so a bit confusing, but you must just understand what I was saying about inversion. All right, so if you look at the NASDAQ right now, there's something that I want to show it to you. Oops, I think there's some technical problem. Hold on a minute. Gosh, I prepared this, but sometimes, things do happen for a reason. Let's give a short moment, yeah? Okay, I think that's this particular slide. Yeah, just give me a minute. I think I forgot to do the anime for the last slide. Just give me a moment. Okay. All right, so this is the NASDAQ right now. Now, the KSI is still green in color, so everything is good. KCX is still black. So as long as this thing is still okay, it's intact, things will be fine. But of course, if you look at it right now, that I'm watching for this. If once my KSI turns to red, right, turns to red here, and my KCX, right, turns to blue, this will be a very heavy sell-off. And of course, now the thing is this, we're not even near there yet because the red bar is not there. So if we look for a red bar to appear, then KSI turn red, KCX turns blue, that should bring the NASDAQ down because that's something that I believe it will start to come down soon. And of course, this is something you can see that again, this was the earlier, this is what happened back. Let me just bring a chart. This one happened back in, that was happening about last 2 years ago. And this is now, this is a previous one again, whereby you can see, sorry, you can see the date exactly. Let me just move the thing up higher a little bit for you guys. Okay, let me just try. Here we go. Okay. Okay, this is back in 2022, yeah? You can see that the market back then for the NASDAQ was going up. Then after that, the bar turns to red. That was the first signal. And then after that, we can see that the KSI turns to red over here. And then the KCX turns to blue. That's it. That's how the NASDAQ after that come off. So if you ask me right now, we are not there yet. Okay, everything is still okay. So that's why no reason to be worried. But of course, look at the chart, looks like it's turning down. So if the bar turns red, KSI turns red, KCX turns blue, that will be a very important turning sign for all the NASDAQ traders. Yeah, so remember that. All right, I'll see you guys on the technical side. This is Cal signing off. Bye-bye.